Hey everyone, it's Nick with Us versus Her. Today, I want to talk about the stock market. I want to talk about, what's happening and where we're kind of heading right now. But first, if you want to join our community, links are below to the Discord and the Options Trading Group on Facebook. And if you could do me a big favor, hit the like button, leave a comment, let me know how you're doing and all this. I mean, it's been crazy. It's been crazy, right? Today, I mean, there was a major rally. S&P, Nasdaq. Looking over the past month, I'm going to zoom in here. Blue line here is the 10-day moving average. One of the biggest things today is over the last month. I mean, every time we closed over the 10-day moving average, there was a big rejection. So today we closed big over the 10-day moving average on S&P. Tomorrow we'll see what happens, but this happened on the 17th. Next day, big red, closed above here. On the 4th, big red the next day, closed above here on April 20th, big red the next day. So I'm looking for, I'm looking for a little bit of continuation here and kind of see what we're going to do. Same thing, same exact chart on the Nasdaq as well, right? So same exact chart. I would say it's a little bit more clean here. Big rejections here. Again, today we closed above on the 10-day on the Nasdaq. And if you guys know, I've been trading pretty much Nasdaq, exclusively here. And, go back to the 17th and the 18th, close above, didn't gap down, but had a rejection here. Same again on the 4th and the 5th, and then back in actually didn't even close. It just got rejected. It didn't even close. It just got rejected back there. So we're kind of in a tough spot. For me, I'm not saying we're at a bottom or anything like that. I mean, obviously there's going to be rips, and so far the rips have been short-lived. I mean, the biggest rip we had was back in March. Everyone's like, "Oh yeah, back to all-time highs," and then we just cratered. I mean, we had a nice rip. This was a lot of fun right here, but then the crater came. But the main thing that I want to talk about is what's happening, with GDP and the Fed and everything that's going on right now. So today the numbers came in. GDP declined 1.5%, worse than thought. So they declined at 1.5%, and they basically were going to be at 1.4%. They thought there was going to be 1.4%, right? So you're kind of thinking okay, why did the market rally today? Then on this news event, and we had jobless claims came in a little bit better than expected. So that is good news. And I've been saying this all along, right? If jobs are good and there's not massive layoffs, so there was a decline in jobless claims, so that's good. GDP was not good. There was a decline in GDP, but it's kind of all going to plan for the Fed, which I think the market likes, right? And the main thing that we have right now is we have super high inflation, right? We have high inflation, and the way to tame inflation is to crush demand. When there's a lot of demand, prices go up, right? So because they printed so much stimulus, everyone had the stimulus money. They were buying TVs, they were buying computers, they were doing all this stuff with the stimulus money. And, people still think people have the stimulus money. I don't think they do, but, the government's saying they still do. But, the government printed trillions and trillions and trillions of dollars and pushed all of that basically into the economy to give it a boost from, the pandemic. Which worked. We were hitting all-time highs, but they went. I think they went a little bit too much. They were a little too overboard. So what they're doing, the Fed is trying to crush demand. Now the flip side to this is that if you crush demand, and we're kind of already seeing, companies got it way ahead of themselves, right? So Amazon said they got way ahead of themselves. They're going to try to they're going to reduce their warehouse space by 10 million square feet. They're going to try to rent out some of the warehouses that they do have, try to reduce size because they expanded too much during the 2021, 2020, 2020. When everyone like I said, when everyone's buying it just really ramped everything. It really ramped everything up. So it's gonna, right now, I would say it's kind of the quiet before the storm. Like, what's gonna happen? Is the Fed going to succeed in dampening demand, yet keep people's jobs, right? And that's the biggest thing. That's the biggest thing. If people can keep their jobs, they can keep their homes that they've been paying for. And kind of where we're at right now. The numbers came out today. Supply of homes for sale jumped 9% last week. Also, this week came out pending home sales, dropped nearly 4%. And then new home sales also dropped because the rates went up. Mortgages are more expensive, so what you could afford a few months ago or a year ago, you may not be able to afford anymore. So this is the biggest thing that I'm watching is, okay, are people able to maintain their job? If they are, everything's going to be okay. Housing market's going to just do what it's going to do. It's going to level out, and we're going to still be high, but we're not going to have that crater. Now, if we're starting to have layoffs, I mean, a lot of companies already saying like Carvana, Facebook, Snap, a lot of these big tech companies that employ thousands and thousands and thousands of employees, right now they said, hey, we're going to have a hiring freeze, which kind of means okay, we're starting to cut the bleeding because our share price is down, our revenues are down, ads are down, everything's down. So we're going to stop the bleeding. We're not going to hire more people. What happens next is if they can't turn the ship around, if they can't start increasing revenues and profits, the easiest way for these companies to start, basically making money again is to reduce their headcount. So layoffs, massive layoffs are going to potentially come. So the question is here, we're kind of in a wait and see period, right? Can the Fed be successful in crushing demand, which they are? And you can kind of see retail sales. I mean, Gap is down, Amazon was down, any retail stock, Abercrombie was down, Guidance is down. I mean, if any retail stock that people are into is down, or they slash Guidance or anything like that. So right now we know the Fed is successful at dampening demand, reducing demand. But when it comes full circle, when you reduce demand, the companies may not be able to afford to employ those people anymore. And this is where it starts getting dangerous, where you're on this, merry-go-round, you're never getting off, right? The Fed's doing this and then has repercussions everywhere, somewhere else, right? So you're trying to patch the holes in the boat, and every time you patch a new hole, another hole opens, and you have to try to patch that one. Meanwhile, another one opens. You get the idea. So right now, my biggest thing is, are we able to reduce demand? And right now, it looks like the Fed is successful. Can these people keep their jobs? That's where we're at right now. And if they can't keep their jobs, then this is when we're going to have another massive leg down in the market, in the economy, and home prices are going to fall, used car sales are going to fall, car sales are going to fall. I mean, everything's going to, because people can't afford to buy anything anymore. So let me know what your thoughts are. Leave me a comment below. Let me know if you watched to the end. As always, stay safe, stay green. It's us versus herd.